Hey guys, what's up? It's the Impeccable Investor here, and as we discussed in the last video, Michael Burry of The Big Short is predicting an index fund bubble from passive investing. Now, if you want to know exactly what that is, then go back and watch that last video. If you haven't already, please hit that subscribe button, turn on those alerts because we have so many great videos coming. All right, guys, now we're going to get into what is Michael Burry holding for his upcoming market crash. As we can see here, this is an article published by Bloomberg. It says The Big Short's Michael Burry sees a bubble in passive investing. This is where it comes from index funds, which we discussed in the last video. But I just wanted to show you that it is actually a topic being discussed in the markets right now. So it may be something that we have to fear. And if we do, how should we set up our portfolio? Well, I'm going to now show you inside of his portfolio, and then I'll give you my thoughts at the end. Michael Burry runs a hedge fund, which is a company in the US. Because it is a company, it must report exactly everything that it's holding from when it buys and when it sells. Well, right here we have a list of its current 10 holdings. So now we can break down these stocks real quick and in depth so you can see what price he got in at and if you should get into. So his number one holding in his portfolio is Western Digital Corporation, stock symbol WDC. It makes up 12.71% of his whole portfolio, and we now know where he bought in at. So it disclosed that he bought it here at 6/3, month 6, day 3, which is around here at around $50. So if we can look here at the historical price patterns of this stock, the support tends to be here and the resistance tends to be here. So on a technical perspective, it does have a lot of upside. But Michael Burry is a value investor. So that means he must see that this company is of good value at this price. So that means he's seeing maybe a double bottom here of good value. Remember, the companies that he invests in have to have good value. So again, guys, this is one of his top holdings right here, and it does have a lot of upside. So that may be a reason for you to buy as well. Let's get into the next stock. This is Michael Burry's second top holding, making 12.54% of his portfolio. It is Cleveland-Cliffs, stock symbol CLF. Now, if you can see, this stock has been going down over the past 7 years now. It's crazy to see how much loss this company has seen. However, he invested here around $10, with the current price being $7.47. So he is down, but as you can see, it is starting to re-offer its dividends. But remember, Michael Burry is a value investor, so he must see value in the stock at this price. Now remember, this stock does have the potential to get back up to its previous resistance of $100 here. Now it's at 7, so that would yield a huge return, but remember, that is potential. So remember, it first has to get above these minor areas here until it starts trending up. But considering that Michael Burry does thorough due diligence, we can know that this company may have some huge upside coming. Now let's look at the third top holding. His third top holding, which makes up 11.41% of his portfolio, is Tailored Brands, TLRD. This has also seen a massive drop in recent times, in the past 3 years. Now, that's crazy to see. Both of these two companies in his top holdings have decreased in value so much. That means that he still sees value in the company at this price. He may have not seen value in the company at this price, but he does here. So he bought in around here, which is around $5. It's now at around $5.28, so it's a little bit about break even right now. But it also does offer a dividend, so he is receiving a dividend for his period of holding this stock. But in addition to that, we do have some minor resistance points here at $30, so it does have the potential to go from 5 to 30. But again, remember, Michael Burry is a value investor, so we only know how long he'll hold, as long as he sees value. So again, guys, this stock also has great potential up to 30, but in my opinion, it first needs to get above $10 before we can see it get up to 30. All right, let's look at his fourth top holding. This is his fourth top pick, making 10.5% of his total portfolio. Just like the past two stocks, this has been decreasing a lot in value over the past year. So as we can see, Michael Burry may have not seen value in the company at this price, but now that's at the lower price, he sees value in it. Looking at it from a technical perspective, we do have that resistance here at 250, and it's currently priced at 150. That means you have the potential to make $100 per share. So if he sees that, then we may have some upside in this as well. Let's look at the fifth holding. We should all know what his top 5 holding is. It is Google, Alphabet Inc. You can see here that he acquired it around $1,100. It's now trading at $1,300 a share. So he may be up on this, but he got it in a dip, and that is basically how value investors go. They know that in the long run, the stock goes up, so you want to wait and buy those dips to make sure you get in at a better price. That's exactly what he did with Google, and that's why it's his top 5 holding. It does have a lot of upside potential now that the market is trending up. Let's get into the top 6 holding. Cardinal Health is his 6th holding. It makes up around 10% of his total portfolio, and just like most of his stocks that he holds, it's been in a previous downtrend for the past 4 years. So now he has seen value in it at the price of around $50. He purchased it around we can see here $6.30, being around $45, $46, now trading at $53. So again, guys, we do have the resistance here at 90, so it does have the potential to go up to 90. And remember, Michael Burry is a value investor, so he sees value in it at this price, but we don't know how long it will take to get up to these previous highs. Now let's look at the 7th holding. The 7th holding in his portfolio is Alibaba. Now, this makes up around 9% of his total portfolio. And just like Warren Buffett says, buy when there's fear. And as we can know here, the past year, we've been having Trump and trade wars between China, and Alibaba is a Chinese company. But that just means we get to buy it, or he got to buy it at a bigger discount. So he bought it here at around 175, now trading at 187. So it does have a lot of upside once it gets above 200. But this is a prime example of a value investor stepping in when the whole market is scared. Don't be afraid to do that. Now let's look at his 8th holding. If you aren't excited for November 12th, then you probably don't know what this company is. His 8th holding is Walt Disney, and it makes up approximately 9% of his total portfolio. He bought in here at around $140, so he's a little down right now, but he saw value in it, especially with the new streaming service being released. It has the potential to be one of the top hits of this year. So again, guys, we can see the results of that earnings after November 12th, seeing the year-end annual reports. We will be able to see how much money they made from that. But again, guys, this is a really great stock that we've been seeing, and Michael Burry has approved it for his recession-proof stock holdings. Let's look at number 9 now. If you haven't already, I don't know why you haven't, please hit that thumbs up button if you're enjoying this video. Now let's get into his 9th holding. It's GreenSky. It makes up about 8% of his portfolio, and it is a new recent IPO. It's been out since around May of 2018, and it's been seeing a downtrend ever since. Like almost all his stocks, he's a value investor, and he waits for the price to match the value or to go under the value, right? It's that safety margin. So we can see here that he purchased his stock around $6.30, so that would be around here at around $12.50. It's now trading at $7.91, so he is taking a loss. But if he's still holding the stock, that means he still sees value in this company. So again, guys, this is one of his lower holdings, but it's still there, and he wouldn't have bought it if he doesn't believe in it. So now let's look at his 10th and final holding. His 10th holding, which makes up approximately 6.5% of his total portfolio, is Sportsmans Warehouse holding. This is probably one of his most profitable positions so far, percentage-wise. He bought here at around $4.50. It's now trading at $7.32. So he's looking at around an 80% profit so far on just this position. Remember, guys, this is how he invests. He waits for dips in valuable companies. He buys the dips and he holds until the value starts to show its true range. So again, guys, wait for the price to match the value or go under value and invest, just like Michael Burry. So this is how he created his top stocks for this upcoming index fund. He's investing in individual stocks that aren't really noticed by the market. So again, guys, if you like the video, please subscribe. Please comment if you have any questions. I will make sure to answer them. And stay tuned for our next video, where I think we're going to be going over Warren Buffett's portfolio, especially since now he's sitting on a lot of extra cash. That may mean he's getting ready for a recession as well.